Hi everybody, this is Chris from TPLI, Turning Point Life Investment. This is going to be an analysis of the Russell 2000, the Dow Jones Industrials, and some other stocks that I've been looking at. First thing I want to talk about is my iron condors on the Russell. They are set to expire worthless next week, and my bear call spread was actually spread at the $880 level. The reason why I did that is because the RUT had topped out around the $860 level, so I sold bear call spreads above that because this is important resistance. And then this is a 5-year weekly view, by the way, and the important support on this weekly view was 750. See this prior high, and I sold my bull put spreads under that around the $720 level, $700 level. So I sold them under support, and I sold my bear call spreads above resistance, and both of them are set to expire out of the money next week, allowing me to collect time premium. Let's go into the 9-month daily view of the Russell 2000 to see what actually has been going on. Nothing really big has been going on with the RUT. The only thing that I really see is that it's been in a side trending range right here. It hasn't broke down under it, so it's not time to go short. Everyone wants to go short, that's why I said it. The bottom of the range is around 794, and the top of the range is around 830. So a break above 830 definitely will shoot up to retest this high around 840. If it breaks under this range at 794, I would expect it to be retesting these lows right here. That's going to be around 770. Only other thing that I see is the RUT is still in a nice uptrend, but if I draw this rising support level, one of the major things we can see is that it actually broke the support level, and it may bounce up higher next week to retest this broken support line as resistance. Now if that holds as resistance, it's going to move back down, breaks under these lows. Definitely going to be short on the RUT, or not be short, but have a bearish bias on the RUT. Moving into a 9-month daily view for the Dow Jones Industrial Average, it's basically the same thing we kind of see in the RUT, is that the Dow Jones is in a range right now. The top of the range is around 12,280. The bottom of the range is at 12,000. The only thing different is that this rising support line that I've drew has actually held as support on Friday. So the Dow Jones is just in a range right now. If these levels of support hold, it's going to bounce up higher to retest the top of this range next week. If it breaks under this rising support line, under 12,000, under the 50-day exponential moving average, that's 3 very important levels of support. If it breaks under there, I'm definitely going to expect the Dow to move lower. But until then, all we see is that the Dow is still in this range, and there's no direction right now for the market. We're going to take a look at some stocks I'm looking at for next week. First one is Apple. It formed a very nice bullish engulf pattern on Friday at the 50-day exponential moving average. It is holding above this rising support line. So if I do expect it to move up higher, probably my first target would be 361 to the upside. It looks like a very good trade. If you want to really try out some weekly options with this, definitely some cheap weekly options, definitely be a good strategy. Next stock I want to take a look at is Lulu, LULU. It's in this range right now. It formed a bullish engulf pattern on Friday. It is kind of cool because if you look at this bullish engulf pattern wrapped around the last 3 days of candlesticks, it's very bullish. If it gets above this range right here around 78.80, definitely would be playing it to the long side. My next target would probably be around $85. If it breaks under here, I wouldn't be shorting it, but I definitely wouldn't be buying it. Next stock I want to look at is TEX. T-Rex formed a bullish engulf pattern on Friday, and it's holding above the $32.50 level as support. And here's the top of the range at $36. If it gets above 36, it's definitely going to shoot up and retest $37.50 as its next resistance level. Last stock I'm looking at is TCK, Tech Resources. I would be probably playing this aggressively. Not, or I'd be. It's an aggressive play, but I'd be very conservative on it. The reason why I'm looking at this from the long side is because $50, it's full of bullish engulfing pattern right here. Let me zoom that in. Nice bullish engulf pattern. This was the prior low, which was support at around $52, you can say. Then the market TCK broke under it, formed a bullish engulf, and went back up in the range. So it was a failed breakdown. On top of that, stochastics, or not stochastics, excuse me, even stochastics you could say, but MACD histogram is showing divergence as well. If I throw on some Bollinger Bands, because I like to use Bollinger Bands from time to time for my analysis and my trades, you can see that it's at the bottom of the Bollinger Bands. So we have $50, which is a nice even support level, bullish engulf pattern, failed breakdown, divergence in the MACD histogram, and at the bottom of the Bollinger Bands. Would be a nice play to the upside, nice bounce play, but I'd be very conservative in playing this stock.